Good Saturday morning to you, and welcome to On the Mark, along with Mark Papa. I'm Gary Byron. Mark is a business. It's called Glastonbury Tax Pro. You can find them online at GLASTAXPRO, GlassTaxPro.com. He's also with Financial Resources Group. You can find them online as well at www.frplan, that's F as in Frank, rplan, frplan.com. And most importantly, I would say write this phone number down. I don't want you to miss the show. So, if you have to call now, you can do so. But I'd rather have you wait till the end of the show so you don't miss anything. Or Monday or the early part of the week, that would be fine as well. Just make sure you call them. It's not only is it beneficial to you, it's going to be eye-opening to you as well. 860-657-8380. Again, 860-657-8380. Incidentally, on that website, there's a link that will take you to Mark Papa's YouTube channel. Or if you just go to YouTube on your own, just simply type in Mark Papa 5207. That's MARK PAPPA 5207. If you miss any part of this show or previous episodes that you may have missed as well, that is totally fine. You can go back there and read it, read it or watch it, view it. Believe me, there's a lot of material that we've covered that if you're a late addition to the show, you may want to go back and revisit. That's not to say that we won't touch upon these subjects again in the near future. And one last thing, tune in later. Throughout this show, I want you to understand you can obtain a $100 gift card. I'm going to tell you how you can get that more towards the end of the show. Mark, good morning. Great to see you.
Hey, Gary. A good morning to you. How are you today?
I am peachy. How are you?
Doing well. I'm actually going to be turning 54 soon, so I'm not doing all that great.
It's not, no, 54 is fine. I had a great 54.
Yeah.
55, that's where I am. Double nickels.
Yeah.
That's a different, you look at things differently.
I still can't drive 55. I remember that song very well.
I can't even drive 65 there, actually.
Yeah.
Not in East Connecticut highways.
I don't know. I've been slowing down a little bit, especially I have a new vehicle, Honda Passport, the new version.
Sure, I've seen it.
It has like wider tires and stuff. And it just, I don't know, I just kind of like driving it a little bit slower. It's just a fun car to drive, and because it's off-roady feel to it, but it handles really well. It's got the best of both worlds to it. So anyway, I like driving normal cars, by the way. I'm not one of these guys that, I don't need to pull up.
Nothing flashy.
Not going to pull up in a big giant Mercedes-Benz and, knock on your door. It's just not my style.
Last week you were talking about going on vacation. Did you do that, or is that still yet to come?
Yeah, no, I went out to Newport, the Newport Harbor and Spa.
Yeah.
Love it there. It's very relaxing. Great view of the bridge, pool. Food is excellent, so I'm going to give a plug to them. And I got 20% off this time, so because I'm a returning customer. And 20% off is actually pretty.
They may want you to return again.
Well, yeah, if they want to give me 40, but I'll tell you what, it's a pretty decent chunk off the price. So I was pretty happy about that.
Well, I'm happy for you. Are the batteries recharged, or are you good to go?
Yeah.
Okay.
Oh yeah, I have lots of energy, lots of positive energy, and it's good to, whenever you go on vacation, it's good to clear your mind and just come back with a new renewed focus. Good. And I'm excited to announce I'll be doing in-person seminars talking about some of the tax strategies we talked about in the last episode, along with what's called the Roth Blue Print that was designed. Actually, they were actually featured on CNBC. But I'm going to be talking about the Roth Blue Print, and this is all about Roth conversions. And we have a massive, massive opportunity right now, Gary.
That's a hot topic.
It is a hot topic, and the deal is there's $43 trillion in retirement accounts out there, including $26 trillion in IRAs or individual retirement accounts. And if you're not taking advantage of these lower tax brackets that just passed with the One Big Beautiful Bill, that extension, you are crazy. Because, I know a lot of clients, they're so worried. I'm tax trapped. I can't get at my money. And I know people who are, they don't want to boost the IRMA. There's so many different things we'll talk about in this conversation today, but there are ways to actually spread those taxes out. I'm going to talk about because I'm going to talk about the traditional way, what we can do with the tax blueprint, the Roth blueprint. But because I have that specialized tax training, and through the Taxable Institute of Untaxable Wealth and my Glastonbury Tax Strategies, I can dramatically accelerate that Roth conversion. Whereas if you go to somebody who's traditionally not trained in that, you're going to have to spread it over probably 5 or 10 years. So it's going to take longer to convert your Roth. So this is something that the Roth Blueprint doesn't even offer. It's a slide I'm going to add into the presentation. And it's only going to take 1 or 2 slides. And if I don't get 100% appointment ratio on that seminar, I'd be shocked.
It's game-changing software is really what it is, right?
Yeah, it was. It actually is awesome. It's designed to show people a few types of strategies. So some people may want income, right? And they want income. Other people may want growth. And then there's other that just might want to defer. So most people at this stage of the game aren't going to have to take their RMDs, if you're not taking them already, to age 75. So the problem is you're deferring to age 75, but meanwhile, that account is building and building and building and building, okay, which is great. But that means you're also building up when it comes to taxes. The bigger that account is, the bigger your required minimum distribution is going to be. And when you have a bigger required minimum distribution, that means you have a bigger tax bill. So with the way the markets have been going, it's super important. I would say anybody whose advisor isn't talking about Roth conversions, I'm not saying this to sound smart. I mean, this software is going to illustrate to you exactly what your real tax problem is. It's going to show you what it'll cost you in taxes if you don't do it, and then what's going to cost taxes if you do it. But what's really cool about the software is that we have a way to actually have you convert that Roth IRA balance without reducing your balance.
I mean, is it a game? You said it's a game changer, but is it the only software that optimizes and demonstrates the benefits of using this structured FIA for Roth conversion? Is that true?
The gentleman that's actually designed this software he's not the most warm and fuzzy guy, but he's really cool. He's very, very good at what he does. He's been in the business over 40 years. And he put this together because he saw the opportunity here. We have $26 trillion trapped in individual retirement accounts that are taxable, okay? And there's only one way to untax your retirement, and that's to get that money out before it becomes a big problem. Once you have to take a required minimum distribution, it is too late. It's too hard for you to convert to a Roth. Once you take your Social Security, it makes it even harder to convert to that Roth. So you have to start. If you start young, let's say at age 60, it's possible. However, most people at age 60 are still working.
So what sets this apart then?
What sets it apart is the simple fact that we have a way to actually, a couple ways. One, it's very, very good at illustrating you a way to not do a Roth conversion without reducing your balance. So let's say, for example, if I had $1 million Roth and I wanted to start converting, all of a sudden I'm going to have to pay tax on that conversion. So let's say I decided to take $500,000 this year, and that means I take $250,000. I'd have to add that to my current income. Let's say my income was even, I don't know, well, let's say a $500,000 IRA, and I wanted to convert $250K this year. That would I'd have to go up to, we're talking about now almost $400,000 in income. I'd have to pay tax on that $400,000. That would get ugly. And then what it does is it reduces your balance. What this does is shows you a way to do those conversions over time, but not reduce your balance. And actually, you combine that with growth, and you combine that with tax savings and tax strategy. So it is kind of hard to illustrate unless I show people. And we don't want to give visuals on the radio. We learned that lesson a while ago. But in addition to that, there's a way to actually do it so for the people that don't have the cash on the sidelines, the way to do it, there's a way to do it where there's literally, you're going to maximize your tax-free growth with zero out-of-pocket costs. So actually, when you do the conversion, The company that there's 6 different companies we actually use their product to do this. Inside that product, they'll deduct the taxes and do what they need to do internally, so that you don't have to come out of pocket for the tax.
Are these like components? Would you call them concepts?
You can call them concepts, yeah. I mean, I don't want to give away all the secrets over the radio, but I want people to come to my seminar so I can show them exactly what it's all about.
Can you unpack them a little bit? For example, how does the Roth Blueprint deliver maximum tax-free growth without dipping into pockets?
Well, basically because what happens is inside the products that we utilize, they actually do the conversion for you. They'll withhold the tax on there, and then sometimes they might give you a bonus so that the bonus helps pay the tax for you. So that's one way to do it. It doesn't have to be that way, though, because I have other tax strategies for people that have the money on the outside. That's one way, though, for the people that don't. I'd say for if I were somebody that all I had was IRA money, I didn't have a lot of cash on the sidelines, and I have people like this. I didn't have cash on the sidelines, and I needed a way to free up some capital. I would do it that way. You would have to do this at least for the first couple tranches. Then once you do that, then what you can do is utilize one of the other strategies that I use for people that actually have the cash on the sidelines. Okay. If you have cash on the sidelines, you don't need to use this strategy here. The cash on the sidelines strategy, that's where I can use my other tax strategies through Glastonbury Tax Pros. But either way, so this is something that, again, I can't talk about in detail over the radio because it's like an 80-slide presentation. However, it's something that I think I want to advertise to people because this tax software is the best that I've seen. And it's great for Roth conversions, and it shows people how to spread their taxes out over time and have them come out of no out-of-pocket, and also show them a way to do it without reducing their balance. Let
me just ask you one other question. Is there an estate benefit to this at all? Or?
Yeah, there is. When you convert your IRA to a Roth, there's definitely some estate benefit there as well. Now, the bad news is if you leave your money in an IRA, your kids have to take that money, your beneficiaries, typically speaking, have to take that money out over a 10-year period. So from the date that you pass, they have to start taking a required minimum distribution that used to be able to get stretched throughout a lifetime. And then I won't get into the rules on that, obviously, if somebody who is 10 years younger or disabled. But the bottom line is most beneficiaries are going to inherit that money, Gary. This is one of the tax traps I want to talk about. They're going to have to inherit that money over a 10-year period. That means if you leave $1 million behind, that means that your beneficiary is going to. Now, you're not feeling terrible for them, but at the same time, if they're in their peak earning years, let's say you die at 80, and you have children that are working 55 maybe, they're in their peak earnings years. Then all of a sudden they have to take on an extra $100,000, right? This is something I had to plan for somebody. They had to take an extra $100,000. That's going to get added on to their $150,000 in income. Now their income jumped from $150,000 to $250,000. Now they're going to get taxed on $250,000. There's only one way to mitigate that. You have to tell those kids the only way to do it is to max out your 401k. And most people don't max out their 401k, so we got to get on the phone with payroll,
right?
And say, look, you and your husband. You know what? How many people I had a couple clients actually do it. They're like, no, we have to renovate the house. Oh, now, well, we're going to get a new deck. Oh, now, well, we're going to go buy a boat. So, but they're going to pay a big tax bill. Oh, we'll just withhold the tax. But that drives me crazy. But at the end of the day.
Last week, you were telling me that you're a member of this Institute of Untaxable Wealth. So that just comes to mind because I want to know how does that expertise play into all of this?
Well, it's very important to understand that when you've done thousands and thousands of tax returns, you've seen thousands of problems. You've seen... and maybe because we live in a democratic state, Gary, I really don't understand it. But I'll show folks that, you're paying an extra $15,000 in tax that you don't need it to be paying on. And they're like, well, So, but we're so busy during tax time. It's really hard to sit down and break down that conversation with the client. They just want to get their taxes done, pay their bill, and be done with the IRS, right? However, for the people who are willing to sit down and plan, we can eliminate that bill. We can show them how to dramatically reduce that, keep that difference, either reinvest it, gift it to their kids, or do something better with that money, then give it back to the government. Because let's face it, is the government doing the best? I mean, what did it cost the Federal Reserve and they're not even the government, but they act like it. What was their renovation? Something like
$3.1 or $2 billion.
Billion.
Well, that's what Trump is saying. I mean, but
okay, I don't care if it was $100 million. I mean, renovate a building. You could build a new building for $300 million, right?
Yeah, but we're hearing it was $2.5 billion. It was what it was originally budgeted for.
That's insanity. So my point is anybody, if it's not your money and your money at risk, are you going to take good care of that money?
Well, it's easy to spend other people's money, isn't it?
Yeah, and it happens all too often. So that's my point. It's better for people to keep more of their own money, and that's what I can show them how to do.
Folks, you are listening to On the Mark, along with Mark Papa. I'm Gary Byron. Mark Papa is with Financial Resources Group. You can find them online at frplan.com, frplan.com. Also, Glastonbury Tax Pro. You can find them online at Glass Tax Pro, GLAS Tax Pro. And most importantly, I would say write this phone number down, and more importantly, utilize it. Call it 860-657-8380. Again, 860-657-8380. And don't forget, coming up in a little while, I'm going to explain how you can obtain your free $100 gift card. That's coming up very shortly. Okay. You talk about all these different pitfalls. And I mentioned a couple of your websites. Your website emphasizes no loss of principal, no tax hits, and volatility control. So I've been on there. How does the software that you were just speaking of make this accessible for, let's say, advisors?
Well, I mean, you have to be insurance licensed, number one. Sure. Number two, there used to be a rule that if you converted to a Roth and the market tanked, you can go back and you can reverse it. They don't allow that anymore. So once you do that conversion, you're stuck. So what happens if you convert at a value of, let's say, $100,000, and the market, and you paid the tax at 20%, and then the market went down 20%? Now you just lost a significant amount of your value. Now, the only way to get that money back is to wait. So sometimes, again, depending on the client, it might make sense to use something that's a fixed product that's, has an upside that's capped but no downside, for the simple fact that it's a lot safer than bonds, and you don't, on your conversion, get hammered if the market were to go down. What would have happened if you planned your Roth conversion right before the Trump tariff announcements? And, thankfully the market's up 30% from the low roughly. Yep. But, what would happen if you did convert it? And I know a lot of, in 2008 and 9, people did their Roth conversions, and they ended up, getting smoked because they had to pay tax on the conversion at a higher amount, and the market went way down, and then they didn't have the money to even pay the tax in the conversion. That happened to a lot. Actually, I had a call from a financial advisor, I'll never forget this, in West Hartford, and he was trying to nickel and dime me. And I said, do you realize the amount of time, energy, and expense it's going to be to amend your return? Well, how much you charging? How much you charging? And I go, well, you're going to come in and we need to sit down and talk about it. I'm not going to give you a quote over the phone because you're, and I was like, you know what, you're stuck. And I said, first off, I said, you're a moron for doing this anyway, in my mind. The way he went about it was very poor planning. So we want to make sure that, you obviously, if you're going to convert, you want to do it at the right time.
Since we're talking real people here with that example, what's the average case look like? You have any success stories?
The average Roth conversion, I believe, is somewhere around, what did I say, $629,000?
Yeah, I think something like that. It was
$679.
I think.
Yeah, so the average Roth conversion is $679. So these are not small IRA accounts we're talking about. We're looking at the larger cases where people don't really need the money. They are, again, feel tax trapped, can't touch their money, but they have a good chunk. People that might have been corporate executives or were really, really good savers. This is the type of strategy, the Roth conversion strategy I could show them. And again, this isn't just some calculator you can go on the Fidelity or Schwab website and try and tinker on your own and figure out with your spreadsheets. I mean, if you're that guy, that kind of person, and then maybe you can probably just figure that out on your own. But, you really do need some sophisticated tools because you have different situations, you have different tax brackets, you have other income coming in, you have Social Security income, Gary, you have capital gains exposure coming through for certain people. You have bank interest in bank CDs and money markets. I mean, money markets, there's more money in money markets than there ever been. And so people have their money in money markets. That's increasing your tax bill. All those things are headwinds that you face towards converting a Roth in a traditional sense. So again, spreading it out over time, using certain strategies, using the software is wonderful. But again, I'd love to get into some of the other tax strategies aside from that as well, that we can use. And again, you have to avoid increasing your adjusted gross income because it does impact, most people that I talk to, they're already at the max for Social Security anyway. But what about that IRM, the IRMA? Again, I mean, that can get ugly very, very quickly. Your premiums could spike for 2 years, and every time you go up in a new tax bracket, it goes up and up and up. I mean, it adds up. So we show you exactly what that expense or that cost is going to be if you make that mistake. So we talk about that. We also, again, want to talk about some of the other pitfalls that can happen when people don't do this the right way. At the very least, get a blueprint. Yeah. So that you understand what you're facing so we can plan around it.
I would imagine advisors love this for closing, right?
Well, yeah, I guess they do. I mean, I think I love it because I can help people, okay? I can help people come up with a strategy that is one they understand. Because this is a very simple concept when we go through this presentation, Gary. It's very, very organized, and it's very simple and easy to understand for even laymen. And most people with a lot of money are better than laymen, but a layman can understand how this works.
But for qualified listeners, how do they know if this fits, especially with potential tax laws changes? They're looming.
Well, that's true. They have to come in and ultimately make an appointment with us. First off, I would say come to the seminar that I have scheduled. Come to the seminar, book a time.
September?
Yeah, I don't have the definitive date yet, but okay. I'll be having that going out. There'll be at least 5,000 mailers, so hopefully if you're a listener, one of them lands in your mailbox. It'll be 5,000 mailers, and it's going to be not a huge room. We're not looking to fill a stadium. If I get a good response, I'll just book another one 2 weeks out from the date so that the people, if there's some overflow, we can get them in there to hear more about the Roth Blue Print strategy. But what really, really has the impact is the presentation. And then we can come in and we can analyze your situation. Now, analyzing your situation isn't looking at your investment statements and telling you you're not diversified. Or, we help you get a really good grasp on where your tax liabilities are. And then we can figure out how much is reasonable for you to convert so that you don't hit any of these other tax pitfalls like the IRMA, like the increase of tax on Social Security, like moving to the next tax bracket, and all those different things that can haunt you. So we want to make sure that we can do it done with laser precision in a way that you understand, but is also in your best interest, not ours. Take 2 minutes here because I'm running out of time. Just parting advice for people who, maybe even advisors who may be tuning in. Well, I mean, I want to separate myself from just the traditional, hey, we have to convert this over 5 years. Sure. With the tax strategies we have, and I'm not going to actually talk about them, but there's some that utilize charitable deductions. It's not a charitable remainder trust or any of that, but there are certain rules in the tax code that there are charitable deductions that gives you, for every dollar you put into the charity, you can donate highly appreciated minerals. It gives you 4.5 times the deduction. So if I put in $50,000, I get a Schedule A deduction of $225. But you basically calculate what you need. So you can get 30% of your AGI reduced based on that number. So that's a big deal because whatever you don't use gets the carry forward to the next year. There's another strategy that I think some advisors are available to. It's a broker-dealer product, and it's also in the registered investment advisory space. But we utilize, and this is only one example. I have 10 other strategies I can use. But the more common one that we see is oil and gas, because you can get a nice deduction on that. So on $100,000, I think the typical deduction is an $89,000 deduction in the first year. And that comes with some caveats, but also there's some potential to make some money on the oil, on the royalties as well, which
Very
get taxed
nice.
over time.
All right, before I wrap things up, I have to make good on a promise. I've been making it every week, and I certainly did it twice this morning. How can someone obtain a free $100 gift card from you?
Well, basically, again,
I know they have to sit down. It's a 30-minute checklist, right?
Well, first things first is I'll tell you, basically have you come in. We'll do a goals meeting. Then if, you're not comfortable, because, again, you're skeptical, you're nervous, comfortable bringing your documents to me that day, I'm going to request you bring in some documents. I want to bring in your power of attorney. I want to take a look at your legal documents, your home insurance.
And if they have none?
And if they don't have it, great, because, again, they come on board as a client. We can do their legal, too. So, we don't...
One-stop shopping. Love it.
Yeah. So we can help them do their legal, help them with their healthcare proxy, their power of attorney. They want to do a will or trust, they're more than welcome to do that. But if it gets too complex, then I have a network of lawyers that we use through that company, or we have local lawyers that we use right in Glastonbury that we refer a good amount of business to who have been great with our clients. So we're excited about that. They're vetted, and they're not there just to, grab a pound of flesh.
So quickly, it's just a short 30, 40-minute meeting.
30-minute meeting. You're going to have to come back. We're going to do the full checklist.
Okay.
We're going to find benefits you're owed that you're not aware of. And it's going to be, most of the time, it's, a little, it's very rarely a little bit. Most of the time, it's a lot. And that's money that I could show you how to put back in your pocket, whether it's a tax savings, it could be a loophole in your home insurance, it could be, a lot of different things.
I can't wait for your seminar in September. Make sure next week you give us some details on that.
Yeah, absolutely. I'm looking forward to it, too.
And listen, if you think the $100 gift card, that's worth it. Well, you sit down, it's no obligation. I can come and get it. Let me tell you, that's small potatoes when you consider how you're going to benefit from these meetings, too. And there's still no obligation when you meet with Mark Papa. And in short, the thing is that there's, you don't have to sign anything. You're just coming in and you're obtaining a wealth of information. Folks, if you'd like more information on Mark Papa and Financial Resources Group, head on over to their website, www.frplan.com, and call them now. Let's make the phone call now, 860-657-8380. Again, 860-657-8380. For Mark Papa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.